It is February 23rd, 2026. And if you own a business in Jalisco or Michoacan,
Majeure or Colima too.
yeah, exactly. You probably aren't looking at spreadsheets this morning. I mean, you're likely looking at broken glass, burnt vehicles, or worse. The images coming out of yesterday's violence are they are devastating.
They really are. And while your immediate priority is obviously physical safety and just, well, cleanup, there is this secondary crisis that hits right after the smoke clears.
The tax bill.
Right, the tax bill.
Yeah.
Which is why today's deep dive is focusing on a crucial mitigation strategy: fiscal deductibility for force majeure.
Because the absolute last thing you want right now is a double loss. You know, losing your property to violence and then paying taxes on resources that literally do not exist anymore.
Precisely. We are looking directly at the Mexican income tax law, or the LISR. Specifically, how SAT criteria around Articles 25 and 37 can prevent you from being financially penalized for being a victim of crime.
Let's jump right into the big ticket items under Article 37. Your fixed assets. Delivery trucks, machinery, the building itself. If those got torched yesterday, your first instinct is probably to think, well, I paid 500,000 pesos for that truck, so I will deduct 500,000 pesos.
But the law does not work like that. You can only deduct the undepreciated balance.
Which means what is left on your books, right?
Yeah.
Like if you bought the truck 3 years ago, you've already written off a chunk of it in previous tax returns.
Exactly. You cannot double dip. You only get to deduct what is left of its tax life immediately in this 2026 fiscal year.
Okay, but here is the trap that caught my eye in the research. The insurance payout.
Oh yeah, that is a major red flag. If you have insurance and they pay you for that burnt truck, the SAT considers that indemnity as taxable income.
Which is wild. You lose a truck, you get cash to replace it, and the government treats it like profit.
Unless you use the escape hatch in Article 37, you can offset that tax if you reinvest the money.
But it has to be a strict reinvestment.
Very strict. Acquiring similar assets to the ones lost or paying off debts specifically related to those exact assets. You cannot just dump that insurance check into payroll or general operating expenses.
So trace that money clearly, or you are getting taxed on your own relief funds. Now let's pivot to Article 25. Inventory and cash. Inventory seems straightforward. If it is gone, it is deductible. But cash.
Cash is a nightmare scenario. The SAT is incredibly skeptical of stolen cash claims for obvious reasons.
Right, because anyone could just claim they had 1,000,000 pesos under the mattress.
Exactly. The burden of proof is massive here. You have to prove that cash was declared income in the first place. No tax breaks for losing off the books money.
Which brings us to the gold standard of proof. You cannot just point at the news and say, look, my store is gone. You need a bulletproof paper trail starting with the denuncia.
Right, the formal complaint filed with the public prosecutor. And for cash theft specifically, the sources note the SAT often demands a certified copy of the auto de vinculación a proceso.
Basically, a judge formally processing a suspect, which in a mass riot situation like yesterday, the odds of the police catching the specific guy who took your register are pretty much zero.
Yeah, which makes deducting cash incredibly difficult.
Mm.
But for inventory and fixed assets, you absolutely need that police report and visual evidence.
Photos, videos, press clippings linking your specific loss to the public events of February 22nd.
And do an immediate write-off in your accounting records linked directly to that complaint number.
Logistics are tricky right now, though. SAT offices in those states suspended activities due to the violence. So you have to use the Bizon Tributario. Do not wait for physical offices to reopen.
Speed really matters here. But there is a silver lining in all this regarding VAT or IVA.
Oh, right. If you lose merchandise to force majeure, you do not have to return the VAT credit you claimed when you originally bought those goods.
Assuming you meet all the LISR requirements and file that police report, it is a crucial relief.
So the takeaway for everyone listening. Your physical security might have failed yesterday, but do not let your administrative defense fail today.
Survival in chaos depends just as much on your legal paperwork and evidence gathering as it does on steel shutters.
So true. Something to think about as you rebuild. How resilient is your digital paper trail when physical reality falls apart? Stay safe out there, get your documentation in order, and we will catch you on the next deep dive.